everybody. This is Boris Schlossberg. Welcome to the Trading Battle, where we put together some of the best traders in the world and have them match their wits for fun, money, profit, and charity. And have them go against each other. Today, I have a very, very special trading battle. But before I even start, I want everybody who's watching me to hit the subscribe button so you are the first in queue to get all of our trading battles going forward and learn some of the best tricks in the business from some of the best traders in the world. And today, I have two world-hardened veterans, really battle-scarred guys who know every market there is. Dave Floyd, who is our returning trader, and Jared Johnson. Hi, guys. How's everybody doing? It's a West Coast bonanza this Thursday night. We have two West Coast traders. That's why they're so relaxed and chill, and they have so much space.
Exactly.
How's everybody doing? David, how are you?
I'm doing really well, Boris. How about yourself?
Great. Good to see you. And we have a new face, Jared Johnson, who is new to us. Hi, Jared. Tell us a little bit about yourself. And
yeah, nice to see everyone.
Great to having you on the show. Now, you sort of a multidisciplinary asset trader at this point. You started trading FX, but now you've moved into managing money in equities and options. So you trade pretty much anything that moves, right?
Yes. I call myself the true non-discriminatory trader. I take it all. So anything that moves, I'm on it. But big focus, stock and options, but definitely cut my teeth in Forex. Spent a lot of years trading currencies.
Wonderful. And Dave, of course, trades just about all the major markets. But what are your specialties? What are the markets that you really love to trade, Dave?
Well, as we were talking before we came on air, I mean, FX has been where I've hung my hat for the last, 15 or so years.
Right.
But as we all know, the volatility has been, just horrible for the last few years, but it's picking up again. So if FX is moving, I'm pretty happy. But I also love to trade 10-year notes and the S&P 500. I trade both of those on the futures markets. That's pretty much my focus, a handful of FX pairs and 2 futures contracts.
That's great. Now, you talked about a little bit about the volatility in FX picking up. I'm wondering how you guys feel about all of this. What do you think is the primary driver for why FX is waking up after about a 10-year slumber? What do you think is going on in the markets? Dave, I'll go to you first.
Well, we were talking about it beforehand, and I do think that interest rate policies could definitely be a driving factor. Could also be just something as simple as a rotation into an asset class that has that people may finally be taking an interest in. I mean, Look no further than the moves we've seen in the yen over the last 2 weeks.
Yes.
That begins to attract players. I mean, things don't get active until people start noticing big movements. So it could be a combination of a complete regime change in terms of interest rates on a global basis, which is basically what's happening. Correct. And the fact that the market's waking up, and that's just getting people to say, hey, let's go flog that market again. We don't want to forget it's still the largest market in the world at about $6 trillion a day in volume.
Yeah, no, it's amazing. And I know, Jared, you even though you've moved away from FX, you said you actually have some strong opinions on dollar yen. So let's talk about that. You were telling me this beforehand. Maybe if you want to share your screen with us and
yes.
lay it out for me. I'd love to hear your thoughts because obviously this is a market you're very familiar with. You've been trading with for 20 years. What do you think is going on there?
Yeah, I think one of the more interesting charts. I wonder if I could pull it up really well.
Yeah, we see the dollar yen.
I'll explain, but I think that I think we have a bit of the theme probably of 2022 is correlations being broken, right? And particularly in currencies, we've gotten so used to seeing certain things happen, right? Oil and the Canadian dollar, U.S. Interest rates, all these different kinds of things, and we're starting to see a bit of a decoupling in a lot of areas. So the dollar yen for me represents. And I'll be honest, even in my full-timest currency trading days, I didn't trade the dollar yen so much because it was always always just it was boring. It was so indecisive, right? You would get these real sideways movements. I am probably contrarian a little bit to what everybody will be looking at and thinking about. If we look at kind of a long-term chart on dollar yen, I think it's gotten interesting, and I'm actually starting. And I think that this could be a great trade to discuss for the battle here. I'm starting to look at and scale in some small short positions.
Small short positions. Interesting.
So
why?
yeah, I'm trading down on here. I think we have in the typical situation of interest rates going up in the U.S., that's typically bullish for the dollar, right? We get a little
Right.
dollar strength out of interest rates going up. But then on the flip side, we have this inflation situation that's run out of control, right? And if history has taught us anything, inflation has a hard time correcting itself without some sort of recession. And so I'm starting to look at the possibility that the dollar has run its course for the near term,
Wow.
and I'm getting interested in dollar bearish trades.
So you're already like literally leaping through the whole recessionary view. You're like already, 6 months ahead of the Fed, and pretty much think that a lot of the interest rate movement is kind of priced in. What about on a technical level? I mean, I'm looking at this right now. You seem to have a very clear double top formation here. How are you thinking about this? Is this a scale up trade? Is this pretty much, let me just try a short here? If it goes 100 points against me, I'll dump it. What would be your structure for this particular trade?
Yeah. So the way that I'm going to trade this one is, my typical FX trades these days are scaled in positions, and I typically will stay with them for whatever amount of time it takes for the trade to do what I know it should do. So I do definitely love, I love all this, support and resistance we have right here, and this nice double top, this nice resistance there. So I love all that. I also kind of have a, there's a setup that I've used so much in FX, and it just kind of has to do with periods of time that a currency will go without pulling back to certain moving averages and distances, time and distance from. In this case, this is my 200 moving average. So I've kind of always watched when you start getting, these really long, year-long periods without touching moving averages, and we start to get these big spaces here with price and so on, and we couple that with hitting major support or resistance levels, in this case, some resistance,
right?
It tends to be a pretty solid trade. So that's on the fundamental kind of macro level. I think the dollar is gonna surprise everybody and head into weakness, even though we've got all these rate hikes coming. But on the technical side of things, we also have a really good technical setup here as well. So
that's really interesting. It's super interesting. Is there any kind of quantitative work you did about what is the maximum amount of time that it goes 200-day moving average without pulling back? Like, at what points does it get extraordinary? Like, 2-3 standard deviations extreme from normal historical patterns?
Yes. So I actually wrote a bunch of programs that tested all of this, and I ran it through every currency pair for 10 years and got some pretty interesting numbers. And funny enough, the dollar yen is pretty much at a pretty near extreme in comparison to those types of numbers.
Interesting.
So distance and time, they don't typically get too much further and go too much longer than kind of where the dollar yen is right now.
Interesting.
So not calling it top 100% here, but I think it's about as safe as any time.
It's what we call a probative top. We put our toe in the water. It's a toe in the water.
We're testing the water. So I'll scale in some positions. I'll throw some. I've got a small short in now. I'll short it again in another 200 pips and probably another 200 pips.
Wow. That's that's really. So this is a multi-week, multi-month kind of a trade. This is a positional trade.
Yeah, this will likely run, I would say, maybe 1 to 3 months.
Interesting. Okay. Well, I want to talk to Dave about another yen pair that we kind of previewed a little bit before the show, which is CAD yen. You were showing that to me on the charts as actually a very strong breakout. I wonder if you can run me through that, Dave, and talk me through it, because you had some interesting ideas on that.
Yeah, sure. I've got it up on my screen right now. There's two things I'm looking at here on the chart. And again, for me, when I'm trading, I'm pretty much 99.9% technicals. I'm
Yes.
obviously acutely aware of all the fundamentals and whatnot, but I try really hard not to bring that into my decision-making process.
Right.
I try to keep it as objective as possible and leave the subjectivity, whether it be technically subjective or macro subjective. I try to leave that off to the side. And I think what's interesting here is you kind of have a combination of two things. You've got, your kind of classic, your wedge pattern or pennant,
Right.
whatever you want to call it.
Right.
And, again, I think from a technical perspective, those are certainly valid patterns. I don't know exactly what the historical tendency is for, these patterns to work and to fail. But what I do know is that, identifying one of these, there's still a fair amount of subjectivity to them. You have to, determine where your swing highs are, your swing lows, but more importantly, you have to be counting on the rest of the marketplace recognizing that same pattern and willing to participate in it in order to get a move like this. So again, I'm not saying there's anything wrong with, looking for standard technical analysis patterns. That's part of the learning process. But I think they are probably a little bit, maybe a little bit more hit and miss. So what I want to factor in is I want to be looking at price levels that have a lot of relevance that we know that the market is looking at because of frequency of trade, volume of trade, time, taking those three elements in and trying to determine mathematically, which is more of an objective approach, where are those levels? Identify where those levels are, because then we can presume that the marketplace in general is going to find that level an inflection point, whether it reverses from it, breaks above it, whatever the case may be. So relying on something more like that, in this particular situation, we had, your classic technical analysis pennant pattern. And then we had this cluster of resistance up here at about I got to put my glasses on.
Yeah, 91, me too.
At about the 91 level, we had a cluster of resistance, and I can go in and explain those. So here, I'm much more inclined to be in favor of this trade. Yes, I think the technical pattern looks fantastic, but when you've got things breaking above what I call the objective support and resistance levels, or in this case, a resistance level, I'm far more inclined to take that trade. I've got a lot more confidence, let's say, in that.
Now, the interesting thing about breakouts. So I had a crypto trader actually on the show a little while back. We talked about this. There are two ways to trade it. It's, if it's a runaway train, it's a runaway train. You just hop on board. But very often, breakouts will pull back to support. Mm-hmm. And I wonder how you handle that type of a. Let's say you're in trade, goes up, comes back down, may even start to to go against you. But let's say doesn't fully fall back into the breakout cluster. What do you do in that case?
Well, it's a great question, and I can tell you, I didn't catch this trade. I did not catch this trade for that very reason, Boris, because what I want to see happen on a trade like this is that I don't want to buy that first breakout, because that to me is, you're setting yourself up for the false breakouts.
Yeah.
And obviously in this case, I missed out. And you know what? That happens. What I really want to see happen is something like this. I want to see it come back. Maybe it doesn't test that support level or what became a support level, but it comes back a little bit and then starts to move higher. This is where I want to get long. And unfortunately, did I miss out on a monster trade? Yeah, I sure did. But I have to follow my rules. My rules say I'm not chasing a breakout, because resistance is resistance until proven otherwise. And to me, resistance is only resistance if it comes back and is tested, and then it becomes support, or in this case, we get that breakaway. So, you're 1 for 2 on these. You're either going to miss it or you're going to catch it, and it's going to work out really well.
Yeah, interesting.
I think on that note, really quick, I've had so many people ask me, how do you trade the perfect breakout, right? Is it the 1 minute candle opening above? Is it the 1 hour? Is it the 1 day candle? And I always tell people, yes, Yes, definitely. Because who knows, right? I don't feel like I feel like trading breakouts is so tough, and you can't. I cannot get into a breakout because I feel like I've missed the move. So if I'm bullish something, I've got to buy it on a down day and hope for the breakout. I've got to hope that the rest of my analysis is good and the breakout happens after I get in. Just like this dollar yen, I'm bearish on the dollar yen and I'm buying it, or I'm shorting it on some up days, right? And so if there is some sort of breakout, let's just say, on this dollar yen here, for example, let's say that, whatever happens, maybe this wants to come back and retest this breakout zone, or whatever. There's plenty of profit to write it back down. I'm not trying to get a perfect top here, and that's why I'm planning on scaling into it more. But I feel like breakouts are such a sticky area because we do want to try to get that perfect entry, and I think you have to take that entry when it's a nail biter and when everyone else is uncomfortable. A breakout in and of itself is like, the trade has confirmed, and now let's jump on board. And I feel like that's too late to be getting into a trade.
Essentially, so both of you guys are sort of limit down buyers, limit up sellers. You're not momentum chasers. Neither one of you. It's against your religion to chase momentum.
Interesting. I have a code.
You have a code. Let me. I want to start with our first challenge of the day, sort of hot off the presses. Give me your trade off the current events, which there certainly have been many, and we've had lots of volatility. And then I'd like to talk to you a little bit about just the general market tone of everything that's going on. So, best idea of current events, even though Dave doesn't care about current events, he only looks at levels and charts, but he does know his fundamentals. So, retrofit something on there. Tell me what you like to do.
Ooh, based on current events. Jared, if you want to go first, go right ahead, because I want to kind of noodle that around a little bit.
Okay.
I got one. If we want to throw it up.
Yes.
So obviously on the stock side of things, there's so many great ones. But if we just go currency, and I'm gonna stir the pot here a little bit. So apologies in advance, Dave. You can hate me for this, but I'm doing it. I think current events. So what do we have right now? We have all this strong oil. Oil's gone crazy. We've got Europe that's just getting all things Europe, right? All my Europe stocks are taking a beating. The euro's taking a beating. All that. I feel very interested in something. If I'm going to go to a real big long-term chart here for a second. This is the Euro CAD. And I think that based on current events, I'm actually getting interested in getting long Euro CAD.
Wow. Jared is out of consensus on this trade. That is literally probably the single most crowded trade in FX at this point, which is, short Europe, long the commodity countries, because of course commodities are going crazy. There's going to be tremendous demand for commodities, certainly through the end of this year. And Europe, of course, is facing all sorts of geopolitical and economic risks right now. So that's been a very, very strong. As you can see, EuroCAD has just been a dive to the downside, and same thing with Euro Kiwi and same thing with Euro Aussie. But Jared is making bid here. He's playing market maker. So what's going on over here? Tell us.
Yeah, I think it's interesting because I think first of all, we're seeing this oil situation go crazy. And by the way, I'm long term very bullish oil. So I'm not thinking that we found any top there. So I think this trade though, because of how priced in, I think this Ukraine-Russia situation has hit the market. It's hit Europe. It's hit commodities pretty hard. I think a little some resolution happening there will cause this currency pair to pop. Now, this is not a trade, with that dollar yen trade. I think I can scale it short as it goes higher. This is not a trade I would do that on. This is a trade that if it can't hold kind of 138, I want to get out and I'll take another stab getting long at 130. And there's probably going to be some opportunity to short it down to 130. I probably won't take that opportunity. I'll probably get long against support against 138. If that doesn't hang, 130 will be my next spot to get long dollar CAD.
Interesting. That's a very interesting trade. It's really basically the peace trade. It's the peace rebound trade. If you think about this, for lack of finesse, and I apologize up front for doing it, but I've been sort of, facetiously calling long oil, long gold has been what I call the war trade. And this is the exact opposite. This is if we get some kind of negotiation, which we all absolutely desperately hope we will get a negotiated settlement as soon as possible. I think you're right that at very minimum, there's a technical bounce here. There's just enormous amount of short covering bounce on the relief side. There's also like an interesting fundamental spin on this whole thing, because if you think about this, one thing that's happened in European continent is we've had a much more aggressive fiscal impulse, especially from Germany, which has always been very, very austere in its spending, right? And Germany now is like spending like a drunken sailor. And if there is indeed kind of hopefully a peace negotiation, there's going to be a mass amount of rebuild. That rebuild is just so fiscally stimulative. You got to believe, you're going to get growth. I'm going to come back to you in a little bit. We're going to talk about European stocks too, because that's a sort of a complementary idea to all of this. But yeah, that's an interesting trade. So, Dave, are you on the opposite side of that? You want to sell it to him, or you want to look at something else?
I'll buy what you got, Dave.
I'd be a buyer of it, but only at a particular set of levels, because again, just kind of going back to the way I view my trading setups, I want something that's objective. I want to be executing a trade where I'm expecting the market in general to react to it. So, right. For me, I'd have to see prices above about 142.40. But for right now, I would consider that a resistance level. But if we can get above there, which, it's only a couple hundred pips away, I might be very inclined. And I think you could get a good pop to the upside. But I would only go long that under those particular circumstances, because that's just the way I feel a little bit more comfortable doing it, because at that point I'm executing at a level that I believe the market will have a pretty significant reaction to.
Right. What's interesting is that I do the same kind of a thing, except on a much shorter time frame. The idea being is that you actually think that what you're doing is trading the turn, but you're not. You're not guessing the turn. I mean, Jared is actually making a hard, strong stance at this level, and then if he's wrong, he's out. He's just kind of making a stand. When you're trading, when it goes up, you're actually trading the beginning of the counter trend. You're actually trend trading. You're not counter, because at that point you're buying strength, because it is short-term strength that'd be moving in that upper direction, right, Dave?
Yeah, and that's how I got started in the business. When I started in the business back in 1995, I was a hardcore momentum scalper of New York Stock Exchange stocks. And the only way to do that really effectively back then was to align yourself with the trend. And that kind of got beaten into my head. Right. Trying to call tops and bottoms. I do it. Don't get me wrong. Not major tops and bottoms, but, trading patterns. But by and large, you're usually better off kind of aligning yourself with the trend and then trying to pick your spots, within the meat of the trend. At least that's what works best for me.
No, understood. So you have all of these elaborate, elegant levels on these charts, which are proprietary to you. But I find them fascinating. I wonder if you could just maybe explain to us in broad strokes what all these numbers mean? How are they calculated? Where do they derive from? How do you use them? Because it seems to be your primary tool for analysis.
Yeah, let me do this. To make it easy, let me take away most of the levels. There's 4 sets of levels.
Okay.
Let's just take away take away 3 of them and leave 1.
Right.
What I was after, and I kind of alluded to it when I was talking earlier, is I was really wanting something that I could add into my repertoire that was objective. Didn't involve my having to dig around and look at a chart and make an assumption or draw a conclusion. Right. I wanted something that I was absent of. So the only way you can really do something like that is to use market data, volume, time, frequency of price. And then I took it a step further. I'm thinking, okay, those all make sense. If I can come up with a mathematical formula that helps me define what an upper and lower range would be, wonderful. But what if I did it across 4 time frames? Because you've got 4 different types of traders out there. You've got day traders, you've got, swing traders, intermediate, and then you got your long-term traders.
Okay.
And every once in a while, those 4 sets of levels, they might interact with one another. They don't happen it doesn't happen too often. But that was the general logic, is try to identify price points in the marketplace where when we get there, most people are paying attention because a lot of trades have probably been executed there. So you're going to get some reaction. If it's a resistance level, you might get a fade off of that. Support level, you might get a rebound. And if we break above, then you get that breakout and you look for a retest and a continuation. So that's what this basically is. So, for instance,
a confluence, a mathematical confluence.
It's a mathematical confluence. So, right now, this is one set of levels, this green band. If I go up into the settings and go to SR2, click on that. Now we've got the confluence of the next time frame. So they're kind of coming together. So we've got that band here and there.
So each one of these coloring is a different time frame. And when you get a clustering of time frames in a relatively tight region, then that becomes much more meaningful to you.
Right. And then as you'll notice, as we add in the quote unquote longer time frames, you're not going to be interacting with them as much because you wouldn't expect to, because this is using really big look back periods. So, the red and purple look back period in terms of 10-year notes, they're not even on the radar right now. But if we get there, now they're on my radar. So right now, you asked me, what's my current trade based on current events? Well, I think we all are aware that we've got a interest rate regime change, certainly at the Fed and probably at a lot of other central banks. Right now, it's hard to be bullish 10-year notes, but I could make the case if we got above, 125, 125.20, 125.27. That could be bullish. But in the meantime, resistance is resistance until proven otherwise. So if we manage to rally up to here, this is what I'll be doing. I'll be shorting with pretty tight stops. But if we get above and retest, personally, I think that's the better trade. I think we got more upside potential, but I don't want to be sitting here right now going, well, if the Fed doesn't do this and the economy, that's me speculating. Nobody gives a crap about what I'm speculating about. What I want to pay attention to is what the marketplace is looking at, and that's where these levels come in.
Honestly, I really hope it doesn't happen, because bonds rallying like this is not good news on any front possible. It's just bad, I'd rather have inflation than recession. That's my view of life.
Well, that makes the most sense. I'm just saying, if that happens.
Yeah.
What was interesting yesterday, though, what was really interesting yesterday, saw it on my Bloomberg terminal this morning. I was looking at the 510, the belly of the curve, and we had a brief inversion yesterday. And I'm wondering if that kind of set off that rally that we saw in equities, because suddenly, you get that inversion. Maybe the Fed's going to back off, in 2 to 3 months' time.
Correct.
So, that's the kind of stuff that I find really fascinating, at least on the macro level, because I think that can drive things.
True. And, Jared, I'm sure you've been listening, because it's just been the chatter all over FinTwitter that if the curve inverts, it's like 1 to 3 years guaranteed recession. Like that, the inversion of the curve is almost always followed by a recession. So I'm sure you're probably watching that pretty carefully as well, to get a gauge of conditions. What are your thoughts on all of this?
Yeah, I think I definitely am keeping an eye on that. I mean, it seems like we have conditions that could eventually lead to a recession. First of all, just to say publicly, I don't know why anybody would want to be the head of any central bank ever. That seems like the worst job. Like,
it's certainly now. Certainly now.
I don't have any idea what Powell thinks he's going to be able to pull off here, or anybody else. It's a tough situation. But I'm watching that, and I think that conditions are a little bit different now than maybe in past recessions. An inverted yield curve is everybody's trigger for its recession time. Recession could certainly happen. I mean, I don't know. I think we're definitely in that territory of rising energy prices, inflation's out of control. They're going to have to raise interest rates like crazy. I mean, these are all the things we see for recessions, but I still think there's going to be some really good opportunities to play that recession in the stock market. Of course, in the currency market, there is.
Yeah. Interesting. So, you're obviously a stock jockey, and there's a lot of interesting stories going on in the stock world. Tell me, what do you like right now? Let's just actually go to our second challenge. Give me your best elevator pitch for the next trade. Like, what do you, think is golden besides gold in the equity market? What would you love? Give me the 60-second pitch. Give me a short. I don't care. Give me a short. Give me a long. What's your high conviction pitch?
So I'll tell you, I have been incredibly long these types of stocks for the last year. So material stocks, anybody that makes something. So steel, aluminum, copper, these kinds of stocks, I've been heavy long, and they're doing obviously awesome.
Wow. Yeah.
And so this, I mean, this is probably my biggest position as far as volume of the size. Cleveland Cliffs, right? These guys are they make steel. So
I mean, they sound like they make steel. I mean, they don't sound like a high tech company. No high tech company will ever call itself Cleveland in its name. Yeah.
Cleveland Cliffs. Yeah. These guys are just good old making stuff kind of stocks. Right. Now, in contrast, right? So a company like Cleveland Cliffs that's saying we make steel price goes up, we just sell it for more money, we're happy.
Right. They have pricing power. Yeah.
We take a stock like Tesla, for example.
Yes.
And what is Tesla going to have to do? They're going to have to buy that steel, and they're going to have to buy that aluminum and all those raw materials for elevated prices. And they're going to have to raise the prices of their cars, and they're going to have to continue having ridiculous numbers that they've had. I think Tesla's days are going to be ugly for the foreseeable future.
Yeah. I am on record, and you can check my Twitter feed, as saying Tesla will never see 1,200 again. I'll eat my words if it ever gets there, but having lived through the first internet bubble, the real estate bubble, the second bubble, this is the poster child for the bubble. When Tesla becomes a normal car company, which it will, it will be multiples lower at this point. And please don't tell me about all the wonderful that it's driving as a service. Have you ever seen Tesla on autopilot, where it nearly kills every pedestrian in its wake? Until we can actually figure out the phone robot that never understands whatever you're saying, my view of artificial intelligence is dubious at best.
Agreed. Well, I think this goes along with like market psychology in general, right? And I don't think it matters if we're looking at a currency or a stock or gold or anything, right? In the case of Tesla and a lot of these tech stocks, right? Anybody out there that you guys might be saying, "Hey, we just trade currencies," but everybody knows Tesla, and everybody knows Apple, and everybody knows Netflix, and so on and so on and so on, right? Yeah. And so many of these stocks have just been getting beat up. But the interesting thing is people aren't selling. Now, there's buying and selling every day, but the holders are holding. And I think they'll keep holding, and and these stocks will drag them down to the depths of endless woe, and they'll stay in there. And that's where I think that these kinds of stocks, right? I think Tesla will go flat for 5 years, right? I think Netflix is going to be flat for a couple of years. I think all these stocks that nobody will sell, nobody will get rid of, will just flatline. They won't go down forever, and they certainly won't recover very quickly because there's no new buyers. Everybody is holding their positions. And I think that's where we'll see a lot of these growth stocks and a lot of these tech stocks just become dead in the water. They're going to do what FX did kind of 2014
Wow.
to 2000 kind of
Wow.
18, right? I think they'll
Right.
just get
That is
really
very interesting observation. Really interesting. It's really interesting analogy. The volatility compression. If you've been in the markets long enough, I remember the 20-year period in Microsoft where it didn't move an inch. Where Steve Ballmer was the president, and I remember Cisco at 100 in 1999 and at 87 in 2022. So there's your buy and hold. Whenever people tell me, "Oh, I'm buying and hold," I'm like, "Yeah, you're buying and holding Cisco for 20 years." By the way, this is it. I know you don't trade this day, but this is an interesting statistic I heard. The Chinese stock market from 1992 to present to today, the index actually is at break even. Like, in other words, 30 years of parabolic growth in the economy expressed a zero rate of return because the Chinese equities have really, really collapsed a lot. I don't know if you follow that sector of the market, but I thought it was an interesting idea.
It's really funny you said that, Boris, because I saw a similar chart this morning. I forget where I read about it. Russian stocks have actually vastly outperformed China over a relatively long look back period too, which is so, again, that's why fundamental analysis and all that stuff can sometimes be really challenging, because why would Russia have done better than China, given that the economic disparity between the two countries? But that's exactly what happened. Really crazy.
It's wild. Have you guys watched the Nikkei much? Because I think Japan haven't they just either reached or barely taken out the highs of 1999?
Oh yeah, something like that. Yeah, it's crazy.
1999, but not the 89 highs. They're still far away from the 89 highs.
Yeah,
they haven't taken
exactly.
Out. Yeah.
Right. So same thing. 20 plus years of just getting back to those levels.
Right. But I will say that I actually wrote an article about this last year. The Nikkei was building that massive base. It really is. It's actually, finally after this is what happens when you have crazy blow off valuations. It takes 2 generations to get back into just break even territory, which is really fascinating. Which is why, by the way, this is my argument for why the buy and hold has been a brain dead strategy for anybody for the last 30 years. Now all the boomers are going to retire, and everybody else is going to be left holding the bag, because we may be in a situation where we could be just trading 4,400 to 3,500 or for the next 5 years forward in the S&P. All of your BTFD will be just F you. Dave, your elevator pitch. Your elevator pitch. What's your best elevator pitch for Challenge 2 here?
I think it was the 10-year notes that I was talking about before. I would comment on Tesla, though. I'll agree with both of you. I mean, I think Jared makes a good point. Maybe it goes sideways. I think that's probably, for me, the secondary situation. Boris, you and I have been in this industry a long time. I started in '95, so I went through the dot-com bubble. I went through the mortgage. I've been through all the crises, and they're all the same. They just look a little different. Right. And I don't think a lot of these people. I remember somebody on Twitter hit me a couple of months ago, and I wasn't being disparaging to anybody, because there's no need to do that. There's a lot of people out there that have made some really classic mistakes in this market. Last thing you want to do is beat up on them. But I think I made a comment about I would never in my wildest dreams be a buyer of ARC Innovation. And the guy wrote me back. He goes, "Well, I'm a scale in buyer." And I'm like, okay, I wanted to say, let me know how that works out for you. But, I wasn't going to do that. But I think ultimately these people say, the diamond hands or whatever BS they call that. Eventually people have a puke point. And the majority of the inflows into ARC were at about $120, if I'm not mistaken.
Right.
And we're now at, we had a big day today. We're at $62. Eventually people are going to get tired of it. The opportunity cost is going to start to wear on them. So for me, looking at Tesla, if we want to show my screen here, I would agree with you, Boris. I'd be shocked if we saw 1,200. In fact, I'd I'd double down. I'd say I'd be shocked if we went above 975. But I think we got to get below 750. That to me is the big number.
Yes.
We get below there, then we're going down to 575.
That's going to trigger a lot of positional shorts, and it's going to really start to doubt it. But that whole point, of like it's the same religion. It's the crypto, Tesla, Apple, Arc Innovation. It's the sort of real growth without limits religion that I've seen so many times in the markets. Where and really the only argument against that is Amazon. That's really the only case where the religion proved to be right. And the only reason for that, by the way, which is really, really interesting, because I read the long thread of the guy who actually was, in the heart of Amazon when all this was happening, is, so why is Amazon so valuable? It's not because, it sells everybody goods, because it's essentially selling everybody goods for no money. The Amazon retail business makes no money. It's because of AWS, right? It's because of the computers. But this is how I always love how everything in life is almost always an accident. It's never a plan. So what was happening is when they were in the midst of the 2000 fallout and they were dying and the stock declined 95%, they had a whole bunch of Sun servers on their books, which were extraordinarily expensive. Remember Sun Microsystems, another great stock that I used to trade when I was, like we're all old enough to remember. That was, the classic. Now it's, you could use it for a garbage can and it would get more value. But they all had the Sun Microsystems in their data warehouse, which were extraordinarily expensive. Their only way to survive was to rip out all these Sun servers and put in Linux. And they put in all the Linux, and they were like shocked that Linux was so strong that it was able to manage their whole business. And they were like, oh, hey, now we can offer that service to everybody else because Linux is free. So the irony of the whole thing is that Jeff Bezos needs to write his whole fortune check, his whole $170 billion check to Linus Torvalds, who got zero for the fact that the whole value of Amazon is built on Linux, which was free. And that's like the story of that growth. I just thought that was a really interesting backstory.
If you'll indulge me for 1 second, I have an absolutely true Amazon story. My wife, she was a grad student at University of Washington. This would have been back in the late 90s. I wasn't married to her at this time. And she was walking around campus and saw a flyer. It said, come meet Jeff Bezos from Amazon. He's doing an investor pitch. I mean, this was when Jeff Bezos was basically nothing at that point.
Right.
And she went to it. My wife's really a good, big thinker kind of person. And she was like, I want to invest. She was going to put like $2 or $3 grand into it. She went home. Her husband at the time, who was actually in the finance industry, was like, oh, that's a bunch of rubbish. And she's like, oh, okay, I won't do it. This is before it went public, years before it went public.
Wow.
She's when it comes up, she's a one bitter lady, even though she's a sweetheart. She's just like,
oh, Jeff.
I know. That's.
But you're right. You're right about one thing there, Boris. A lot of these things, and I say that about trading too. Sometimes, your good fortune isn't really the result of a plan. You're in the right place at the right time, but you happen to know where to be. You did put a plan in place, but you don't know how it got there.
That's actually a great point. I wonder if you agree with that, Jared, because I think the longer you trade, the more you realize that it's just a matter of managing luck. That so much of your trading and structure is just how you can respond to both positive and negative stimuli on the markets effectively. That it really isn't. It doesn't really matter if it's a 20 moving average or a 200 moving average. If it's going to go up, it doesn't really matter if it's a triangle or a Fibonacci retrace. It's the movement itself is what you need to catch, and a lot of that is just being in the right place in the right time. Do you agree with that?
I agree. I mean, I've been in the industry for 20 years myself, and some of my best trades were surprises, were shocks. I just thought, here's a trade I'm putting on, and it works like crazy. It's the more you practice, the luckier you get kind of situation. But I always get people asking me, they say, where's this stock going? Where's that stock going? And I always say, I don't know, but I'm going to line up my probabilities, and it's either going to work or it's not going to work, but you're right. It's you just show up and you get probabilities the best you can. And that's all anybody can do. So
exactly.
Yep.
Woody Allen said 90% of life is showing up. The older I live, the more I believe that. Guys, both of you, if I can ask you both to place the trades, because the producers can't place them for you. So if you guys can place the trades, and I'm going to take a look at what else is on our docket here, because we do have one more challenge left before we do this one. So on challenge one, just to kind of review, Jared was going to short dollar yen, right? That was challenge one. Challenge two was you Cleveland Cliffs. Is that what we're doing? Or I don't think it's on our books. So what would be your short Tesla, that is on our book that we could trade.
Yes. So that's a tough one. If it's what do we have available on here? I think I think a trade that could
Berkshire Hathaway. Maybe I think that's I'm not sure if Berkshire is on there, but that's an industrial that I guess you could use as a substitute for your basically buying something that hurts when you drop it on your foot. That's your
I want something I can't fit in my trunk.
Right.
It needs to weigh a megaton. So, but I think I still think at this point, if we're just talking charts and so on, a trade I could put on the platform that I think is not a terrible idea for a short-term trade. I know we didn't totally discuss this, but I think for a short-term trade, oil. I think crude is not a terrible. As we talked about earlier, I hate buying things that are already running up, and so
no, I'm there with you. This is a good trade. You want to get long here?
Yeah. So I think
I like it. I really like it. This is, to me, it's a parabolic blow off top with at least a continuation to maybe 110, 111. There's a lot of nothing is resolved. It's still getting tense. The Saudis and the Iranians are sniping at each other. There's just a lot of there's just too much problems that I think oil gets squeezed a little higher. So I like it. I like that trade. So that'd be like your second trade. And Dave, sorry, what was your first trade? I forgot. What did we discuss?
It's a good question. I think we were talking about, I don't know if we ever came to my first trade, to be honest. I think we just did the second one, and that was 10-year notes. And unfortunately, that's not on the system here. But another idea that I have is shorting the Aussie dollar at 74 with a 74 sell limit, which I just placed in the account. And it's up on my screen right here. So that one I just placed. I think that ultimately the Aussie and Kiwi could move lower, at least technically speaking. And so that's what I would place. So I've got a limit order out to get short at 74, stops at 74.30, so fairly tight, and maybe a downside target at about 72 and a half, right in there.
Okay. And then for the second trade, what would you like that's on the platform? Anything on the FX side that you were, maybe? Well, I know you don't want to chase the CAD yen, but I
don't want to chase the CAD yen, but another one that I would probably consider shorting would be the euro. It's been on my radar. I actually see two possible entries for the euro. I think a really solid entry would be to sell it into 111.87, right around that area. You can see it on my screen right here, right up here. But if we don't get quite up there, I would sell a break below 110.27, assuming that holds and gets retested. So I'd basically be watching my screens for if either of those levels give way. I just don't think the euro has a lot of steam. I think we've had a nice rally over the last week or so, but I don't think it's got a lot of legs.
Interesting. So I want to just shift attention to a market we really haven't discussed much, and I know that neither one of you really follow it that closely. But I'm just curious from your trading perspective, what you guys think. We're talking about the compression of volatility. Crypto has really, really slowed down a lot lately, and just from a macro point of view, what do you think, Jared? Do you express any crypto ideas via stocks? Is there? Do you trade anything as a crypto proxy on your book?
So I have kind of steered clear of being too correlated to cryptos. I do some just basic Bitcoin type of stuff, but I think the charts are telling us a pretty interesting story on, say, Bitcoin, for example.
Okay,
Right?
let's take a look at what you let's take a look at what you see. Okay.
I think we have this. Here's kind of a year and a half look at Bitcoin. I think that Bitcoin is kind of falling into that same category, right? Of some of these growth stocks, of the Teslas and the Facebooks and the Netflix out there, where
Right.
people are so married to, they're baptized into the crypto, situation
Religion,
that
yes.
the
Baptized into
religion
Bitcoin. How's that for alliteration? I like that. Baptized into Bitcoin. Okay. Yes.
baptized into Bitcoin, and
Right.
they won't sell. They won't sell.
Right.
And so I think that is also going to cause this consolidation, this base, this lack of movement, where nobody wants to get rid of their position because everybody believes wholeheartedly that Bitcoin's going to be at $500,000 at the end of, which I've been hearing every year for I don't know how many years now. Bitcoin's going to be at 500,000. And so nobody wants to miss that move. They don't want to be the jerks that are missing that move. And Wall Street has been buying Bitcoin at 50 and 60,000, which they're great at doing, right?
Right.
So we've seen these big institutional positions coming into Bitcoin at these high prices. So I think I get very interested in Bitcoin below 30,000, but I don't touch it until then. And I think it holds above 30,000 and it stays below 50,000 for probably a fair amount of time.
Interesting. Wow. Yeah. So here's the irony of Bitcoin, in my opinion. Everybody buys it because it's a store of value. It's probably going to be actually a very decent store of value because it's going to not move either way. And people are going to hate that. People are going to hate it for the very reason of what it's doing, which is always the irony of markets. Dave, any thoughts on crypto or just sort of alternative assets, or just general macro views? Before we go to our last challenge.
Nothing on crypto. I don't really. I mean, I'm aware of what prices are. I've never traded crypto. Don't follow it. Don't track it. Just never came into my wheelhouse.
No problem.
Maybe I've been in the industry too long. I saw it for what I thought it was, just another one of those things that, and maybe there's something, but I'm not an expert.
How about old man's crypto, gold? Do you have any view on that?
Hold on, let me get my cane out. Gold is interesting. I don't do much with it, but I certainly track it. I don't usually follow the gold futures. I usually just track the GLD for when I make a trade. Certainly bullish.
What is this telling you? I mean, this blew through your big long-term levels. I mean, this just spiked, right?
Yeah, it spiked. You can't really factor this level in because this wasn't relevant back when this happened, but this was. And the fact that we broke above it and we're retesting it, I think, is pretty key. So if we hold this 177.50, 177.40, that could be pretty telling. I wouldn't be surprised. So,
right.
But to me, to go back and kind of address your question, where I find the most opportunity, not necessarily just now, but looking ahead, I really think the VIX is really going to be where there's going to be some opportunities. And given that we've had these big spikes in the VIX, which is a mean reverting instrument, people need to stop thinking that it's some sort of a trending instrument. It's a mean reverting instrument, as you can see here. I think there's tremendous opportunities in selling these spikes. If you look at the VIX quantitatively over a long period of time, anytime we get into the mid 30s, now I hate to say it because maybe next time it won't happen, but anytime we get into the mid 30s, if you either sold the futures contract or sold calls or bought puts, you were rewarded because it's a mean reverting instrument. I like the VIX. I think there's going to be a lot of opportunities there.
As a guy who trades mean reversion all day long, I can just tell you, it's beautiful. It works all the time until it doesn't, and then it's just the worst feeling in the world.
It's
Okay.
great
You know,
until it's not great.
True story. The other day, I knew that the VXX, which is the ETN, was going to be suspended, or they were not going to issue more shares. And I actually had sold some VXX calls. I sold some April 32 calls and was trading right around 32. And the VIX was moving lower on the day. Next thing I know, VXX is trading at 40 and it's halted. And I'm like, I can't really say what I actually said.
Yeah.
And I was like, holy crap.
Right.
Luckily, prices came back down. But, for a while there, I was like, oh, my God, this could be one of those things where, like you say, it works until it doesn't work. And I might have had like an anomaly because of this news event. And luckily it worked out. But Jesus.
Right. Yeah. That's right. The absolute rule of mean reversion is small size, my friend, because it's going to bowl you over. You don't want it to be a steamroller. We have one final challenge before we go, because we're actually running out of time here. The best short-term trades for the next 5 days. Looking forward, Jared, to you, because you are the stock jockey. What and obviously it can be FX too, or any other market. But what looks most obvious to you for the next 5 days? And I know you already did gold. I know you already did oil because that looked very strong. But and you're welcome to couple that with gold if you want. But what else is on the charts that looks good to you?
Yeah, the next 5 days, I have some short-term stock plays going for the next couple of days that I'm doing. But I think some short-term action. If we're talking stocks, I like China ETFs. FXI is a big one that China has stepped in and said, we're not going to let our market come completely unglued here. And their stocks have been rallying like crazy on that news.
Right.
So I like however we can express our exposure to China. I don't necessarily want to be heavy in Chinese.
I think we have Baba on the platform. So there you go. That's the ultimate contrarian bet. Bye, Baba.
Bye, Baba. Anytime anything is,
I'll buy it. I'll buy this chart. Like everybody hates this trade, and I will buy this trade because I think that's actually anytime Mark Andreessen is gonna tweet out about how stupid this investment is, that's the bottom. So I'll buy it.
It's go time. So I like Baba. I don't mind some Baba. So if that's on the platform, I think that's a good short-term trade.
I think we can get you into that. I'm all about getting you into trades. And Dave, you can stay macro. You can stay S&P. Maybe next 5 days up or down. Green light, red light, Dave. We want to short S&Ps.
I'm gonna short the S&Ps into 44.35. If you look at my chart, that is the big purple level, which is a much longer term historical level. I'd be foolish not to at least try a short there.
Okay. All right. Well, we're gonna short the Aussie. We're gonna pretend like it reached your level. Short the S&P. We're gonna pretend like it reached your level, so that we can mark you to the market, and then we can hold those trades for the next 5 days and see how they play out. And then then we'll see what everybody stands for. Before we wrap up, it's been a really, really interesting hour, guys. I've really, really enjoyed it. Thank you so much for hanging out with us. Before we wrap up, tell us a couple of things. Tell us a little bit about, and we'll start with Dave, a little bit about what you do, and then a little bit about the charity that you're trading for, so that you can, tell us what this is all about. So tell us, what is Aspen Group? What do you guys do? And where can people find you?
Well, we primarily do two things. Provide software, which is the levels you see on your charts, on my charts here. Provide those to anybody on TradingView and anybody on MotiveWave. You can have these lines. They work on any symbol. It doesn't matter what the symbol is. So that's a big drive for the business. I also provide a morning report to people to kind of tell people what I'm planning on doing using these levels. And the third thing we do is we do a trade replicator program where any trades that I do using these levels gets replicated into client accounts. So we got kind of a trident approach over here.
Oh, that's very cool. That's very cool.
Yep.
It's like
the charity.
So are clients copying you via futures?
No, if you're a U.S. citizen, you don't have access to it, but for you just get FX only. But if you're a non-U.S. citizen, in fact, we use 8cap as one of the clearing firms. We're expressing those futures trades via CFDs.
CFDs, yeah. And by the way, as somebody who trades, CFDs for my prep trading account, the 8-cap CFD spreads are awesome. I was just telling it to the managing director today, so they're doing a good job. Our sponsor is doing a good job.
Yeah, they are.
Garrett, tell us a little about. Oh, sorry, and I forgot to tell you, you're obviously trading for the Humane Society, which is a great charity.
Yep.
I mean, how can you?
Humane Society of Central Oregon. Anything we can do to help out abandoned pets, I'm there 100%.
Exactly. I got to tell you, there's been an enormous amount of heartbreak. Of course, all of us have just felt horrible heartbreak over Ukraine. But one of the worst things I saw was this guy who was just holding his German Shepherd, who was so frozen with fear that she wouldn't move on the street. And I was just like, for some reason, that made me, everything made me angry, but nothing made me angrier than just that picture. I just wanted, to really, this whole thing to end.
Yeah.
Anyways, Jared, on a brighter note, tell us a little bit about yourself, what you do, and what charity you're trading for.
Yes. So, Jared Johnson. So my company, I have two companies. Day Traders FX is, obviously I get my name from before when it was a big FX focused.
Get that URL, huh?
It was just such a good one. I couldn't give it up. Give it up. Yeah. But I still do run, a trade group. I provide, daily market analysis and recommendations and so on. Pretty heavily focused in the stock and option side of things. But we are always watching Forex, looking at currency moves and so on. And then I also am an active fund manager, manage outside clients' funds, U.S. and international registered investment advisors. So
great. And you're trading for what's the charity? It's Rescue. I'm sorry, I missed the name of it.
Yes, the charity. I actually, the great folks at 8-cap and the Trading Battle always say, we have such good charities and so on. And so this is a Ukraine focused one. And so this will be dedicated to helping the folks in Ukraine. So
great. That's wonderful. So thank you guys. It's been a real awesome hour. We have some really great trades. I don't know if do we have access to the dashboard. I'm going to ask my producers if we have a chance to see if there's anything on the dashboard. But here's Jared. Dave has placed 0 trades because he's all limit exit. We're gonna before he goes. I'm gonna force him into the market because Dave's sticking to his of only trading limit, not understanding that in Trading Battle you don't get the luxury of limit. You have to go market.
What the hell kind of racket is this?
We go in head first on this whole thing.
Apparently.
Exactly. There are no limits in Trading Battle, but this is going to be very interesting to see. What I loved about Jared's ideas is just sort of they're really out of consensus views on a couple of things, including, of course, dollar yen here and Euro CAD, which I thought was really interesting as a buy component. I didn't get a chance to ask you about European stocks or just European indices, like say DAX or things of that nature. Which, by the way, I don't know, Dave, do you look at DAX at all as an index?
I don't actually. I mean, I glance at it, but no, I don't spend a whole lot of time at it. No.
Right. I actually, I really haven't thought of myself much, but just on a fundamental basis, I feel like there's an opportunity there, from a contrarian point of view, because so many people are, it's obvious what's happening there, but on a recovery bet, that could be a thing that could really run. What do you think, Jared?
It makes sense. Yeah, definitely makes sense.
I think so. I think the recovery trade is going to be pretty fantastic there. I'm actually pretty interested in some of the European banks. So Credit Suisse, Deutsche Bank, pretty high on my list of stocks that I'm watching.
I mean, if you were ever a contrarian, I mean, those are stocks that are just so hated at this point that they're not even like on the floor, they're below floor. Like how like in the European elevators they have like the 0 floor, and then when you go to the basement it's like -1, -2, which always freaks me out as an American. So like those are like -2 stocks right now. But
I'm
yeah,
I'm in the basement. I'm in the basement. I'm going for it. I think there's going to be some good moves to be had on those guys, and I'll probably stay long until like Jim Cramer says it's time to buy them, and then I'll get out.
Yeah, exactly. Love it. Awesome, guys. Thank you again so much, everybody. Subscribe to the Trading Battle. Amazing battles coming up for us, and of course, everybody watch this on replay, and we will bring you up to date as to how these trades work out. These have been a little bit longer than our typical trades today, but I think that's actually what makes it so interesting, because these are more positional trades that hopefully you guys can benefit from as well. Dave, thank you again, our returning trader. And Jared, we loved having you. We'd love to have you again. Thanks so much, guys. Boris Schlossberg for the Trading Battle. Over and out. I'll see you guys in the markets.
Thanks, everybody.
Thank you. Bye-bye now.